Hey, what's up, everybody? It's Yaniel here doing a quick over the weekend market analysis and just an overall view of how things are going and what to expect of the coming days or the possible future. So, with that being said, I'm gonna go ahead and start with the most obvious one, ES, and I'm gonna go ahead and mark the same pattern I marked on my last market analysis where we called that double bottom and said once we break above this resistance, be a good time to go long and to get that price target of around 370. If you don't recall that, you can go ahead and look at some other videos. So first things first is I'm going to go ahead and get my market analysis from the previous time back on top right here, which would be this double bottom we caught with this resistance here. Now that we've got this set up and we've got that break, the next thing we really want to start focusing on and charting is these new levels that we got around this area. Go ahead and turn off volume so it can get out the way. So the one thing I would focus on and really pay attention to when it comes to ES is this trend line we got going on right here, and make sure that we're staying on top of it and that we're not going below it. So I probably get that drawn out first, and then the next thing would be the resistance right here. And if we look closer at it, it looks like we're starting to fall into a rising wedge pattern on top of it. And we both know that rising wedges are going to either be a bearish pattern unless we get some kind of bounce off of it that leads to a breakout. So this is the daily time frame. This is what I would be looking forward to on ES. If you are charting it and you are following it, just watch this rising wedge. As far as levels go, I'd probably mark this first resistance we have here and then another one that we have here. If I could get it. Right there, and then finally our third most recent resistance up here around 37.2. And these are the levels I would be watching if I were to be trading ES or just looking for market direction in general. Now you can see right here they kind of established some kind of strong support at 36.68, but we did see a major bleed the other night that led us to 35 or 3600 the other day. So if we go ahead and check out the 6 hour just to double check our lines and make sure we are trading indeed in that pattern. Yep, we're looking good. We are consolidating this area. And then check out the 4 hour, see if there's any more recent patterns that we might be missing or possible trend lines. The only other one I see right here is that this possible double top at that 37.22 resistance. And if anything, we could possibly look to draw out a downwards trend line from this top leading down to this top. And we would probably want to look for a resistance breakout right there this coming week for some sort of continuation if that's one thing you are looking for as a bull. As a bear, I wouldn't get too crazy on being bearish until we break back below down this trend line right here from our rising wedge pattern, and that's on the larger time frames. Now, switching over to NASDAQ and Q, I'm going to go ahead and start on the daily as well. We do see a similar pattern right here, this nice, beautiful double bottom. Mark that support right there, and then we get this resistance up here. Whoops. Then we have our resistance right here, along with our double bottom resistance right about right here. Now we can see that our double bottom resistance did tie in, or I should say, came back into play on this bounce from when we had that leak down above that breakout, but we were able to hold above it, so things are now starting to look bullish for the NASDAQ 100 list. Although we do have another trend line drawing prior to this, that looks like we are starting to follow as well. Same thing with that rising wedge pattern. Just something to look out for those who are looking more in recent or current trends on the short term thing. I'd probably look out for these pullbacks in this rising wedge. Let's skip straight to the 4 hour and see if there's anything else particular that stands out. Nothing really on this consolidation telling us it could go either way. And things have been pretty chaotic as far as economical data goes. So that's one thing to keep your eye out on in the coming future. Next, the one thing I always love to check is the daily time frame on the VIX, which is our market volatility. Looks like things are starting to come back down to some low volatility things, which for bulls is good news. The less volatility we see, the more rallies we end up seeing, and historically proven. It's been shown that when Democratic parties are in charge or in lead, or just in general in the White House, that the market seems to have a stronger rally compared to a Republican Party in charge. So with that being said, you want to look forward to that lower volatility as a bull. That way we can see less bears or short sellers coming in if you're long, or just in general, the less volatility we have and more of a stable market we have, the easier it would be for us to follow and get an idea of where we are heading this coming year. It's been a really shaky year, a lot of economical data and concerns, especially with the stimulus check So that's going to be one of the biggest news or catalysts to look out for during the week until we get some solid confirmation on news with the whole Trump fighting for the $2,000 per person versus the $600 that's been approved. So that's just one thing to look out. As far as tech sector goes, strictly tech, we have XLK right here. Going to go ahead and move this one to the daily as well. Gonna wait for that one to buffer up. See if we can get the chart pulled up. Any second now. There it is. All right, sweet. So as far as XLK goes, tech sector, same thing on the daily. We do see that double bottom. We're gonna see a lot of double bottoms on a lot of these charts, sectors, etc., etc. So we're gonna get these levels marked out. First things first. Go ahead and get the median and then the roof, aka resistance, and then we have this one up here. Same thing as the previous two. We do have that trend line that we want to definitely mark up right there. Looks like we're holding it a lot stronger than the other ones. And then we got somewhat of a rising wedge right there. But again, it is too small. It's too tight to really give any sort of confirmation on that. So just something to keep an eye on, really. Go ahead and see if I can make that difference now. Okay. So tech sector, we definitely want to be careful. If we look at these daily candles, you'll see that they've been a little bit more unsure and decisive on these bull days. But as far as the bearish days goes, there seems to be more confirmation and certainty on these shorts right here on these sell-off days versus our bull days. We see a lot of indecision, but we end up closing up, but sometimes barely up, or sometimes we get some solid closes like this. Then keep in mind this close only is from green because we were able to get above 127.47, but yeah, the day we ended at 128.06. So overall on that day we had about a solid 49 cent change that gave us that green day. Then we had a nice pump pullback, and now we're about even on this squeeze right here. So let's see what's going on that 4 hour. See if we can pull anything out of that squeeze. As far as this squeeze goes, there's really nothing I really see that makes me want to continue looking at it, other than another possible uptrend line right here and another one right here to get a stronger uptrend channel. Again, this is a 4 hour, so we gotta be careful with that bias, and we see more choppiness than we did on the daily. Moving on to QTech, same thing. This is also a tech sector as well. You see it right there, first trust for the NASDAQ Tech Index. We're going to go ahead and move to daily. We're probably going to see that double bottom as well. And we do, but we don't see it for a while. Well, it's more of a diagonal double bottom, not the strongest. Well, cleanest double bottom, but we definitely have this uptrend right here. The only resistance or line I'm really concerned about is this resistance we see right here. So with that being said, I'm going to draw this channel right here, and that gives us, again, that rising wedge. Just something to be cautious about. If anything, and we end up pulling back after all for whatever reason, the strong support we're going to want to see, or the dip you're going to be looking to buy, it's probably going to be around here, 127.31, about a $10 some cents pullback. If we want a stronger market confirmation, you're going to want to be cautious of that 139.59 level. As far as resistance go, I'd say probably be around somewhere right here on this candle, since that's when we first see that leak, and then an attempt to push back above it, but that's when things start getting shaky. So 135.50 I would have marked as resistance, and of course our roof up here of 139.14. With that being said, as far as the market analysis go, things are looking a little bit to remain bullish, although things are starting to look a little shaky. The volatility is giving us a little bit more certainty on what's going on, especially with VXX, VIX also being down, meaning that sellers are starting to step out, and that's the one thing we want to see and pay attention to. Now on VIX, as far as this go, VXX, we do see somewhat of a double top right here, an M forming. Just something to keep an eye on. Then we have a strong support right here that we've been in for the last month. If we're able to get below that, we should be fine, but I believe if I look at the 5 year, that should be almost our low. Nope, our low is going to be down here, which was December of last year, which is around $13 on VXX. If we see that again, then we know it's going to be a pretty good year. Although that one thing we do want to be cautious of is a possible double bottom forming out of that. So to form a trend line, see where that takes us. Pretty high trend line. Not going to be worried about this one. Not really relevant at all to this current trend downtrend that we see right here. and that's one I would be careful of right there. But VIX, both VIX are starting to show sellers are starting to step out. Volatility is starting to step down. Now focusing more on SPY. SPY is just another replicator of ES. ES futures just gives us a general idea of where market direction is heading. Now as far as the SPY technical analysis go, the one thing I do want to be cautious of is these dojis consolidating right here onto this inverted hammer almost. More of a, what was it? Would I call it a gravestone? A gravestone candle right here. Which is a bearish reversal candle indicator warning. So if we see any upside to it, we do want to be careful of that. Now that's on the weekly. As far as the daily candlesticks go, if we're able to get them to load, see right here that we have a lot of consolidation and a lot of squeezing this past week. Well, the past month or so. Starting from December, we can see that it's starting to squeeze really bad. So normally when we see these kinds of things, the one thing we want to look at is the volume during these trends. So from this section to this section, where's the rise at? The pump's right here. Looks like it starts from right here. We see some volatility going up, up, up. But the one thing we do see about volume is a decrease or it's inconsistent as well. Definitely a lot of volatility that led to this and a lot of indecision. But the biggest thing that stands out from this is this candle kind of seems more of an outlier. This gravestone candlestick that indicates some serious bearish activity coming up. Now, focusing more on tech cues. If I could get this chart pulled up right here, we see that double bottom that we've been seeing a while. So the one resistance we're going to want to be cautious of course, is this top one right here, which we seem to have gotten a clean bounce off. But if we want any more highs on the tech sector, we would definitely want to get above that 311.81, round that off to 312. It looks like we are starting to hold on some new higher lows or that solid bounce. So we're definitely going to have to go into the week very cautious and careful of what to expect, especially the new year. There definitely is a lot of anticipation of a market pullback, but also a stimulus rally. But yeah, we haven't seen either. So moving on to the US 30, which is the Dow Jones, we can see that double bottom pattern as well, and the stronger resistance right here. The one thing I do love about the Dow though is that it is a lot more stronger when it comes to its decisions and candles. We really don't see much indecision like we have been seeing recently on these past ETFs and sectors. It is starting to look more like a flag rather than a squeezed out rising wedge. So I'd probably be wanting to look at some of the Dow 30 sector stocks and the stocks that are underneath it. So we have banks, we have AXP, Apple, BA. We have a variety of stocks that made it into the Dow 30. And probably want to check out these and see which ones are standing out and being strong. One of them that has been strong lately has been UNH. Visa has been strong as well, but it's definitely one that's always going to be consolidating. Walmart has been holding its ground, although that lawsuit did not help whatsoever. And you can see that it's still on trend right here as well. So when it comes, as far as the overall market goes, I would be very cautious on these coming weeks and probably wouldn't expect any direction to around February or March, especially with the ES trading the way it's trading. I mean, everybody knows that ES is the biggest one to be watching. So until we get above 37.22 and we're able to get a clean bounce in direction, I wouldn't be looking forward to any possible swing trades until we get some more reassurance on this, especially with the way we are looking at ES trading right now in this current downtrend. We're definitely going to need a break above that. Go ahead and switch to the 5-minute and see what I got drawn out here. Let's see. So yeah, we can see a big major resistance on the 5-day 5-minute right here at that 36.96 level. So before we even test that 3700 level, we definitely want to fill that dollar gap that we have going on right there. If we're able to do that, then we're probably going to be looking at some nice bullish activity and momentum going, and probably look to grab some swings or start picking up equity possibly again. Because the one thing that you want to think about as a long-term investor is buying, not worrying about when to buy the dip, but knowing when to buy the dip. And if you weren't buying during this last week, you definitely missed out on a good opportunity considering how discounted stocks work. If we look at the Russell 200, or is it 2000? What is it? The Russell 2000 ETF. Switch over to the daily. We'll see that it's been on a crazy rally lately. As far as the daily goes compared to these other stocks, it really hasn't been giving us that same pattern at all. And it's been pretty consistent with its trending. It's definitely a slow mover as well, and one to look to hold long term. So probably want to look into stocks that are under the Russell 2000 and see how they're trading in correlation to IWM as well. That being said, I'm going to do my final check, which is the U.S. economical calendar, and see what possible events we have coming up that might act as a catalyst to the market direction. Now, for this coming week, we have Monday starting at December 26th, or sorry, December 28th. We have nothing scheduled. S&P Case-Shiller Home Price Index. So something to look out for those who are more into the real estate portion of the market. That's on Tuesday at 9 a.m. Eastern. Then Wednesday, we have advanced report on trading goods. One we're definitely going to want to be looking into as well. Chicago PMI and pending home sales. Wednesday is going to be a day to look out for bears. And definitely the pending home sales to see how the market is, how the economy is feeling when it comes to buying homes again and buying again. End of the month, December 31st, we have the initial jobless claims, and we have total continuing jobless claims. So it looks like we're going to be doing jobless claims early in the morning, December 31st, which is something that we definitely want to look out for, considering that that's been a huge catalyst and bias, or what would you say, encouragement to the way the market's looking to trade during that day and for the rest of the week. So it looks like that I would probably be paying more attention to see what's going to be expected to come for Thursday, December 31st, as far as this coming week goes and market catalyst. That's all for this coming week. Nothing on New Year's. And as far as what's coming 2021, next big event for the GDP forecast is going to be January 28th. So one date to mark in your calendar as well. That's going to be the end of Q4, and we're going to be going to Q1. With all that being said, hopefully this guys helped you get a better idea of what's going on in the market, what's to come, and what to expect. And just take everything I say and everything you see in the news, especially the vaccine news, with a grain of salt. Again, this is all my personal market analysis and my bias, not any advice on what to do and what to expect. These are just the current trends I see right now. And like always, trade the trend. The trend is your best friend. With that being said, I hope you all had amazing holidays with the family and have an amazing, safe New Year's. And as always, happy trading.